Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord and Genuity Wealth Management. Thank you, everyone, for attending again this week. As always, every Tuesday at noon, we broadcast our weekly update where we have a focus on something specific, usually timely. Today, we're going to be talking about market volatility. So join us every week. If you want to subscribe, you can go to mikeonmoney.com. You can subscribe there. Send us an email, which you can access from there. Or if you have any specific questions, you can book an appointment directly into my calendar at our site. So please feel free to visit us there. I know we have quite a few new people with us this week. So welcome. At the end, you will receive a link for the replay should you want to review later if you couldn't attend the whole today's whole session, or if you want to forward to a friend, feel free. We're always welcoming of that. As always, what we cover here is for your educational purpose, keep you informed, but do not take it as advice or as a recommendation. Always do your own due diligence, or contact us or your professional advisor to just get a more unique look or a more tailored look to your personal situation to make sure it applies to your portfolios. So as always, your sound and video is muted, so don't worry if you're watching this at home and you want to go grab a coffee and just having it playing. You won't interrupt anything here. If you do have a question, you can click on that Q&A button, type in your question. We'll try to get them to them today. I tend to run these things right to the limit of people's time, so we do follow up with any questions afterwards to make sure you get your answer. If you're watching this on the replay, again, just go to mikeonmoney.com. You'll be able to email us in your question or give us a call. We're happy to help out any way we can and make sure that we cover off anything specific that you'd like to ask. Also, if you have anything, topics specifically you'd like us to cover on these, fire them in. We're always happy to hear your ideas and hear what everyone's interested in to talk about, especially with everything that's going on out there today. We're happy to take a deeper dive into a lot of different areas for you. So let's take a look at what's going on. So what we're looking for this week is the U.S. housing starts for September. We've been tracking this every month. It's a good indicator of kind of the health of the economy or how things are moving. We do expect it to be very positive numbers. We've certainly seen positive numbers here in Canada. Now, most of that's been driven around low interest rates so far. So people are able to borrow really, really affordably. We've seen a lot of people making shifts on the housing front, whether it's upgrades, moving out of town. The job might have moved online permanently, and they don't need to, say, live in a more expensive area. They can move out to the suburbs. Something maybe areas more conducive of where their lifestyle is geared or family is geared, and the selling one, taking a little bit of profit, moving out, or upgrading, moving the capital over and upgrading to another area, and certainly taking advantage of that low cost of borrowing. So we should see the U.S. numbers come out. I think I saw some ones early this morning saying that the new permits for residential startups was at I think it was a 12 or 13 year high. So just an indication that those are going to be some strong numbers out of the US, just like here in Canada. We're also looking for revenue out of Canadian National Railway. The third quarter earnings are expected to be reported later today. Again, looking for positive. That's one of our big holdings in our portfolios. We're looking at probably trimming after the earnings come out, just because it's done so well in the portfolio. It's always good to take some profit off the table and look for other opportunities with that. We're certainly not getting rid of the position. We still believe in it, but we have a really low cost on it, so we want to take advantage of some of those profits we built up. Procter & Gamble is another one we're looking at, also big in our portfolio. It's been great. If you can walk through your cupboards, and I guarantee you're going to find several Procter & Gamble products, everything from cleaning products to soap to tissues. They make almost everything in the grocery stores, or distributed almost everything in the grocery store. So a great company to hold, especially through this. Lockheed Martin's looking at reporting. We'll see kind of how they fared through this airline issues. Netflix is going to be a really interesting one. Obviously, they did really well early in the pandemic as everyone stayed home and we're streaming. A lot of competition coming out now. Also with live sports coming back, might have changed people's watching habits a little bit. But of course, we have Amazon Prime. We have the new Disney Plus channels. Peacock streaming. There's so many. Apple has got one. So it'll be interesting to see how Netflix fares through that, and also Snap. So we're heading into third quarter earnings season. We're going to start talking about a lot of companies and a lot of sectors as we watch things go through, or see how things fared through the third quarter, which was really the reopening. So we'll get an insight to how the economy is doing there. Pelosi and Mnuchin are taking a deal to the Senate around the stimulus package, or the second stimulus package out of the U.S. This is the one where Trump had come out or tweeted out that he wasn't going to let one go through until after the election. The markets really didn't like that, so he kind of backpedaled a bit. So Pelosi and Mnuchin have been trying to work on a much more targeted, so not a broad stimulus package, but look at the specific sectors. One of the key ones they were talking about was the airline sector, how much they were going to help out in that area. So that's going to the floor. So we'll hear about that. Not sure if it's going to get through. There's a lot of opinions, I think, in the Senate to push things out onto the next after the election to see who's going to be the president for the next 4 years. Presidential candidates are doing their final debate this Thursday. The microphones will be muted for the response parts. So we'll see how that plays out. The last one, if you watched, was a bit of a debacle. I'm sure everyone heard about that. They're trying to make it a bit better. We'll see. It's kind of interesting to watch. I'm glad I'm up north here watching it. When we talk about we did a deep dive in one of our videos on, what happens if Trump wins, what happens if Biden wins. Voters tend to lean on Trump for the economy, but he's behind in the polls. But remember, the polls, we are talking about, the popular vote does not matter in the United States. It comes down to some key states with the Electoral College. So, those swing states are going to be very, very impactful. So, the polls are generally reflecting kind of the popular vote, which might not mean too much in the end. So, that's why we're seeing, the Biden being so far ahead. If you're hoping for a Biden win, I don't know if I put all my faith on the national polls. You really got to take a look at those swing states and see what's happening there. And also keep in mind, the Senate's up as well, right? So you could see a Trump win, but he could lose the Senate, which, would handcuff him from doing anything or doing too many things. Or Biden could win and not get the Senate, right? Which, could be a problem as well. So we'll keep an eye on that. Farmers, the farmer sentiment has indicated they're still a Trump supporter, despite how they've been impacted by the trade war. Farming industry as a whole has been severely impacted by the tariffs and trade war that Trump has driven. So a lot of jobs lost, a lot of bankruptcies, but overall, the farming industry is still leaning Trump when it comes to the election. There were 6 Russian intelligence officers that were charged with hacking. This happened again right after happened previously right after the 2016 election. I can't remember how many. I think it was 5 or 4 back then. Obviously, they'll probably never face U.S. charges, as they're in Russia and not very likely to come to the U.S. to have their day in court. But it just obviously the FBI is focusing on hacking and anything to do with the election this time around as well. The Supreme Court is going to review 2 of Trump's administration immigration policies. It's not the first time it's gone to the Supreme Court. In fact, the last time it was, I want to say, rejected. One of his policies was rejected, but it wasn't all out rejected. It was just simply turned away for modification, saying it didn't meet a certain couple of issues, and they took it back for a revamp. And so not surprising, they're going to move that forward, especially with the new nominee being pushed through, trying to be pushed through before the election. Chances are it's going to happen. So so they want to get that in front of that court where it's leaning a little bit their way, well, a lot their way for the next little while. Trump's out there, you know, again, talking about swing states, Florida being a swing state. He's out there trying to boost voter turnout. It's traditionally a Republican state, so of course he wants as many Republicans out voting. So Democrats are doing the same thing to their base, trying to get everybody out, but there's definitely a focus on Florida being a swing state. And the election 2020 voting challenges. The early mail-in vote has been at record numbers. You've probably seen in the news, you know, lineups, you know, anywhere from hours to 8-9 hours, even the drop-off boxes, because there's been a limit on how many in each county. You know, you've seen photos of hour-long car lineups waiting to drop off the ballots. We've even seen the Republicans put, I won't say fake, but unofficial, let's call it that, drop-off boxes in California. So there's a legal battle over that, concern over what happens to those ballots. And even I read that one of the boxes suspected arson, one of the boxes. So you know, a lot of concerns around the challenges of getting people to vote, not just getting people to vote, but actually getting their vote to count down in the US. Other things going on in the market, the bulls are back in the NASDAQ. We've mentioned kind of in August and through September, we were fully expecting kind of a pullback in the technology sector. NASDAQ, most tech companies do trade on the NASDAQ. And we did see that, you know, and again, it wasn't a negative sentiment towards the tech sector. Just simply it ran so quick, so fast from the March lows. People were just taking profits off the table. We did it in our portfolios. Made a ton of sense to do, and now we're seeing you know, some investors come back in on those dips. Still not back to as high as it was, but just, you know, slow return for some cash into the tech sector. So we'll keep an eye on that over the coming weeks. Hedge funds. So if you've been following us over the last few months, you know my opinion on the oil sector. Really no driver to push up demand. So there's really no positive outlooks on the price of oil, or no extreme positive outlooks on the price of oil. And hedge funds are very concerned around the oil exposures, not only because of the current demands, but if we go into a full second shutdown, you know, what will that do to the sector? I mean, it's already struggling as we've reopened in most areas, or in a lot of areas, but now where we're starting to see more shutdowns happening again, how is that going to affect OPEC and OPEC plus countries, producing countries, have already turned off supply as much as they can. You know, and still in May, and if you remember in May, we got to minus $34 a barrel, as there was just nowhere to store all the oil that was being produced out of the ground, and so they had to turn off a lot, and all new projects were basically turned off. So a lot of concern over the next few months if we go into another shutdown. Doctors, you know, constantly looking into COVID and its effect on people. Now, you know, start to see some cases where diabetes is being triggered as people recover from COVID. So, you know, continued concern over the long-term effects of having COVID, not just, you know, surviving the first round, but, you know, what other effects is it having on the body? And they've been looking into this. There's, you know, especially with kids, they're talking about some long-term lung damage being created. So, so diabetes is a new one that's being looked at anyway. Other news, Fed, the Fed's Powell, the head of the Fed, Powell, is taking a deep dive, or starting to take a deep dive into digital currency. We mentioned this last week, really triggered by Facebook's wanton foray into the cryptocurrency to bring it more mainstream. Obviously, it's an unregulated. The big thing about cryptocurrencies, which you probably heard of Bitcoin, is that it's unregulated. It's untraceable. It's unregulated. Of course, that brings the criminal element. There has been a lot of fraud. There's been a lot of crime around cryptocurrency. People have lost millions and millions of dollars, but it's probably going to come mainstream at some point. The U.S. Is not the only central bank in the world looking to or looking into and researching into this and how they can bring it mainstream with some regulation. Is that regulation going to take the benefits of it away, or will it continue to be popular or be viable? And that's what they're taking a deep dive into in the U.S. and, as I said, many other countries. In fact, I don't know any central bank which isn't at least looking at how it could affect things moving forward. The EU went to the World Trade Organization to put tariffs on some U.S. goods, specifically aircrafts. This is not really trade war, not really part of a trade war. This is very normal for countries to look at. So certain countries will subsidize a particular industry for whatever reasons, economic reasons, to create jobs sometimes, keep companies afloat, and that gives them unfair pricing advantage on the world scene. So countries will put tariffs on it just to even the playing field. Canada's been part of those a lot of times, whether it be our dairy products globally, if we subsidize farmers, Bombardier, our shipbuilding industry at points have been subsidized and have experienced tariffs. So not really trade war, but the EU has moved that to the World Trade Organization, and it looks like World Trade is agreeing with the EU on potential tariffs there. Founder-led, interesting stat. We were looking at the different companies that have been doing well and which ones haven't been, and kind of noticed that founder-led firms were outpacing the CEO-led firms in the market recovery. Not overly surprising. It's a unique stat, worth more investigation. Founder-led firms tend to be more private, less bureaucracy involved, whereas a CEO is generally a public company that has board of directors, shareholders, a lot of stakeholders. So usually get things done, to be nimble, to shift dynamically is harder in a CEO environment versus a founder environment. And obviously with COVID, companies have had to shift quickly. They've had to adjust how they do business. And so not overly surprising, but I am interested to kind of see, more depth, a longer time horizon beyond COVID or the pandemic, to see if there's anything behind those stats. Also, OPEC's continue to be concerned over weak oil demand. Again, going into a second wave of the pandemic, what is that going to mean? They're already having trouble keeping some of those countries, the OPEC plus countries, to keep their supplies down, because some of the countries, rely on that income, and if they dump a bunch of cheap oil into the market, they're at least getting income. Versus propping up the price, which is what OPEC is trying to do for their member countries who, need a higher price to sustain production. Weakened U.S. consumer watchdog. So, under the current administration, the consumer watchdog, or the consumer defenders or consumer right advocates have lost a lot of power. You might agree with that or not agree with that. But the consumer watchdogs are looking, if Biden wins, obviously the Democrats would beef up that role. They believe, it's part of the party's belief that there should be a lot more consumer protections in place around existing and new products to the market. So there's a lot of lobbying happening around that area right now. As every week, we take a look at the world numbers. So we're at almost 41 million total cases worldwide. Total deaths at 1.1 or just over 1.1. Of course, the U.S. About 8.5 million, and total deaths about 225,000. So kind of sad numbers to see. Canada has broken through the 200,000 mark on the total cases, still under the 10,000 on deaths, but they are creeping up. Our second wave has been a lower death rate and a lower hospitalization rate, but those numbers are creeping up. So it's important for everybody out there to do what they can for themselves, for their family, and for everyone out there to keep everyone safe. Obviously, there's not a complete list as far as ranking goes. Just to fit on the slide, we take out some countries. So if you want to see a full list, you can go to worldometer.com and see all those numbers. So let's look at the markets. So Wall Street did slip a little bit, on the hopes that the stimulus support was the hope of a second stimulus package coming out is start to wane a little bit as people are worried that it's not going to get through before the election. Obviously, in the US, it is desperate to kind of get that through. Other countries have continued with phase 2, phase 3 of stimulus packages, which at least is helping those most in need. But it is, they are not as generous as the first one. So we also saw the dollar edge a little bit lower while gold gained temporarily on that news. And again, the dollar's kind of moving against the market. So if the market goes down, the dollar will go up. So a little bit of back and forth in those areas, and we'll talk more about oil. I mentioned Netflix is coming out with their numbers, the third quarter, so we're looking for that. Procter & Gamble, I mentioned. Of course, their toilet paper and Tide is, cleaner products have done great. So we're looking for some good numbers there. Commerce Department, I mentioned, is coming out with the housing numbers. So I have to pause here temporarily. Hold on, everyone. Okay, so not a technical glitch. I have 2 puppies in the house, and one of them needed a quick attention there. So thanks for your patience. I'm back. I just had to let one out. So where were we? All right. We're moving on to the top news out there. If you've been following us for a little while, all around the oil sector, a lot of struggling, or the energy sector, I should say, a lot of struggling companies, cost cutting happening, but a lot of mergers and acquisitions. And this is really normal when a sector goes into a deep, recession, basically. You get a lot of mergers, a lot of consolidation. So ConocoPhillips out there buying Concho Resources, which is a shale play, for about $10 billion. We're going to see a lot more of that. We've already seen quite a few, especially in the energy sector. And we're seeing it in other areas, but certainly in energy where it's been pretty hard hit. Wall Street, bullish on Netflix results, as I mentioned. Despite some return to live sports and competition out there, the estimated numbers are pretty high. Halliburton is eyeing a slimmer shale industry, so they're looking to cut costs and emerge out down the road profitable when hopefully there is an increase in demand. And again, that's just our energy sector having some troubles. Intel is taking this opportunity to sell off their NAND, the memory chip division, to a Korean company. Again, just streamlining. They're taking out some non-core business, focusing on their core businesses where they can expand and increase revenue. Where NAND the memory chip side of the business wasn't an area that they were really expertise at, and it was outside the kind of their core specialties. And the US is screening over 1 million airline passengers. So this is something like we're seeing more and more of. Canada's certainly exploring it, where they're going to screen, people before and after, or potentially before and after the flight, for COVID, to hopefully reduce the quarantine times, especially on international travel, and just be safer in domestic travel. I know Canada's been pushing and has ordered many of these quick 15-minute tests that aren't as intrusive and get results a lot faster than the swab test, for the airlines. And I think the airlines are pushing for that as well, just to give people more confidence to get on the plane, and also when they get back. In Canada, no major financial events. We do have a vote coming up this weekend here in BC. So if you haven't done so, the early polls are open. Mail-in ballots, probably too late to mail it in now, but if you have one, or if you've already mailed yours in, you had the opportunity to do that. And of course, your regular polls are open on Saturday. So do get out there and vote. I know the world doesn't look at BC's political vote as important, but I think every every vote's important that people get out there and express their opinion. Otherwise, how will the politicians know what we really want? Canada top news. Business sentiment has improved, and I think we're seeing that, despite a second wave and a potential shutdown. There's been kind of categorizing companies in kind of two groups. The ones who kind of sit around waiting. You'll hear the term all the time, waiting to return to normal. Those ones I think didn't do well or didn't do as well through the closures, and will do even worse through the next if we have a next round of closures. But those companies that did innovate, those companies that did shift, adjusted, did all that they could, maybe not to keep things at the same level, but keep things going, are even more prepared for a second shutdown because they learned a lot, they figured a lot out. And if we do go into a second round of closures, they kind of know what worked, what didn't work, and how to do it cost effectively. So the sentiment's pretty good around those. And I think we're going to see that kind of continue even with potentially a weaker economy. U.S. borders with Canada and Mexico. The U.S. has kept it closed until November 21st. That's from the Homeland Security Department. Not that I think Canada is really anxious to open the border. In fact, Trudeau came out and said he really wasn't. Estimates are we probably won't until the new year, which is going to be tough on families who in the two countries who might be split, or if you have the vacation home on either side of the border. Americans come up here, down there. I know I'm in Whistler a lot, and the Americans that normally up there, of course, are not, and their homes are kind of sitting there empty. So it's tough, especially if we go through the holidays, but probably fairly likely, unless some political winds change dramatically. Mexico's company Alpec is buying the Styrnix division of Nova Chemicals. Nova Chemicals being a Canadian company, a lot of plastics and alloys. They're selling off one of their divisions down to Mexico, much like Intel, just streamlining, sticking with the core business to improve the balance sheet. On the exchange front, the U.S. dollar weakened a bit. This is the general trend we expect to have. If we do see another downturn in the markets, of course, the dollar will strengthen. Flight to safety, so global flight to safety goes to the global currency, which is still the U.S. dollar. But overall, with the amount of spending the government's doing in the U.S., and obviously will drive inflation. We do see a downward trend in the U.S. dollar as we go into 2021. So, but we will see some up and down depending on what's going on in the market. The euro closed up slightly at 1.18 against the U.S., and that's mostly on stimulus packages that they're doing there, and positive sentiment. I won't say the talks have been really positive, but positive sentiment kind of out of the Brexit talks to keep things moving. Canadian dollar was when I looked this morning at 0.7620, up slightly from last week. I think we were 0.7614, so not a big move against the US dollar. But again, we expect the trend to improve for the Canadian dollar as the US slides lower. On the commodity front, I've talked a lot about oil. We did see it down a little bit. I know every week I talk about up or down, but really it's been trading kind of the 38 to 42 level. It goes up slightly here and there. For example, when the storms hit the southern U.S., they close the plants down, drives up the price slightly. They open the plants back up, drives the price back down. But really, we continue to see no improvement on demand. There is an agreement with the OPEC plus countries until January 1st, but even OPEC saying that that's not going to be long enough. The supply is way too high in the world. And you even have some of the countries like Libya who's continuing to grow their output when everyone's asking them to not. It's an example where they need the revenue. So really, again, not a lot of pressure on the demand side to drive up the price of oil. And even if we do see the demand increase, the supply is abundant in the world right now as far as oil goes. In addition, a Biden president potentially new sanctions on Iran, they could increase their output from that country as well. So, not faring well for the energy sector. We are expecting the inventory data to come out later this week. It should be down. Capacity should be down, or percentage of capacity used should be down because supply has been turned down so much. We are still using oil, of course, day to day and in products and goods, but nowhere near the supply that could be turned on fairly quickly. And gold went up slightly and then back down slightly, and that's just the movement on the expectation of the second round of stimulus. So let's talk about volatility. It's obviously a volatile time in the market, so I thought it was a good time to talk about volatility and what volatility really is, because normally we in our industry, we tend to throw volatility around as a term for risk. And I think that's how a lot of people perceive it. And it certainly does quantify risk in some ways in your portfolio, but volatility is not something you should actually see as something scary. In fact, volatility should be, if the portfolio is being managed, properly, according to your particular risk and your particular situation and goals, volatility can definitely be your friend. Keep in mind, volatility can be an upward movement. If a stock goes from $10 to $15, but it's not a linear graph, of course, there's always movement. That's volatility. Going from 15 down to 10, no, it's never a straight graph. That's volatility as well. Volatility actually just refers to the swings and how big those swings are in a stock. Some stocks have, some investments, I shouldn't say particularly stocks, but some investments have larger swings, even on an upward trend. Those are more volatile. Same on a downward trend, they can be more volatile. Some investments have smaller swings. Even as they're moving up or down, they have smaller ranges that they trade in. Those are less volatile. So you can have a stock really low volatility, it can still be going down. So don't assume something that's volatile is necessarily risky. But again, looking at that volatility, that can be an opportunity to buy in. So pick in the sectors that represent, and companies or investments that represent something appropriate for your risk level in your portfolio that has a bit of volatility. That might just be a good entry point. If you see a swing downwards temporarily, it could be a good buy-in. We've talked about the potential for the Canadian banks. They really haven't run up since March. They had a bit of recovery, but certainly not as much as the general market. They pay a very healthy dividend. And remember, in 08, 09, we did not see them cut the dividends even through those struggles. And the lot of section of the banks are doing well. We've seen a lot of loan loss provisions already been taken into account. We have a pretty good picture around the banks. I'm not saying go buy the Canadian banks today, but certainly in the next month or so, as we get a better view of the second wave and what it's going to look like, they might be an opportunity. So they've been volatile, might be an opportunity to go in. You get paid a very healthy dividend while you wait for a little while, and then you can get a pretty good upside. The Canadian banks have traditionally been good investments, depending on your entry point when you buy in, and that volatility can provide you with an entry point into something that you might have thought was a little too expensive before. I think earlier this year, the dividends were, because of the higher price, your dividend payout was down to about 2% in some cases. And now you're seeing it over 4%. And even through some call structures, you can even get above 5% on your dividend, closer to 6% on your dividend payout. So that's an example of opportunity. If you follow me on here, I talk about Visa, MasterCard all the time. I love those positions. I've held them for ages. We've made tons and tons and tons of money on them. They've seen growth because, not just because, the great companies, the cash flow, they don't own any debt, or they don't own the credit card debt. They, every time we swipe, and of course we become a more and more cashless society, especially through COVID. And as we shop online more and more, those are two companies that, are some of the main ways that people pay online. So they collect that. So when you see volatility or pullbacks in those, which we certainly saw in March, great buying up, great entry points for those companies. So yes, they would rank, they will show as higher volatility, but good entry point for the portfolio. Same with stocks that have been going up too fast. We talked about the CN Rail has done extremely well for us over the last couple of years, and certainly in 2020, it's been a great growth name in the portfolio. We're going to trim some of that profit off. It's been volatile on the upside, but we're going to trim some of that profit off. Still leave, our core investment in there because it's still a well-run company, but take that capital and go find another good name that's going to add value to the company and add maybe some increased growth, as it's already seen a bulk of its growth for 2020. There's other areas, maybe those bank stocks, maybe the TD is one of our favorite Canadian bank stocks, is worth moving some of that cash to. So when we talk volatility, when you talk risk, two things always keep in mind. Really understand, is your portfolio appropriately risked for you? Because risk means something different to everybody. Someone says something high risk, or if I call something high risk, it might be high risk for one person. It might be acceptable risk to someone else. Some people would find my Visa and MasterCard quite boring. Our MasterCard's up almost 90% this year. So, it can be good reward. Good company. It doesn't have to be those sexy names all the time. It doesn't have to be Amazon. It doesn't have to be Tesla. It can be a really good value if you get in at the right point. So looking for that volatility in your portfolio could just mean a good entry or a good way to add to a position you already have there that you have a lot of confidence in. So that's kind of what I want to wrap up on volatility. I want to really make sure people understood and defined it. If you have any questions about volatility in your portfolio or any other questions, as I said before, reach out to us at mikeonmoney.com. Give us a call, send us an email, book a time. As I mentioned, we did do some deep dives into in some videos there on what a Democrat or Republican wins means in November. We talked about different sectors that have had volatility that are opportunities to look at. Next week, we will be talking about kind of which sectors have done the best, what areas of the market, which companies have done the best so far in 2020, just to kind of let you know where things are. And I'll try to cover which ones we're trimming, which ones we still see as a good opportunity, and bring you up to date on that. With that, thank you everyone for joining us. As always, we look forward to these things. Love any feedback you have. Send it in. Send it in to us. Go to our page and let us know what you're thinking. And if there's anything more we could be doing better for you. With that, I'll let you go enjoy your day. Take care, everyone. Bye for now.